How's it going, everyone? It's Sam. Today I want to talk to you about a smaller crypto, still relatively large in the grand scheme of things as far as cryptos go, but smaller as in not one of the top 10, not one of the top 20, 30, 50 even that we usually talk about. And it's got a big change coming up here very soon that could cause it to go up in price, I think, a good amount. And I really like what they're doing. I really like how conservative they're being and the fact that they're actually trying to change to make money. Crazy to think about that, right? But they're actually trying to become profitable. And they are one of the top lending platforms on Arbitrum. One other thing that is of note is there is a large Twitter account, someone with a really large following that's really well known that we'll talk about later in the video, that labeled this S tier. It's an S tier cryptocurrency right up there with Ethereum for the next bull cycle, and he has a long thread on why that is. But before we go into that, let's take a look at the market. Bitcoin's looking pretty good at 24,500, as we've said recently. If we can break over this line at 25,200, that'd be really bullish, especially if we could retest and then continue up. That would be great. We got rejected by the 200-week yesterday, but it's only a matter of time. But there was some interesting news on the economic front, which I'll be posting another video today. But that has caused the market to cool off a little bit since yesterday, the whole market. Now, the crypto that we're talking about today, again, is not in the top 10, not top 20. It's an omni-chain money market built atop layer 0, and it's Radiant Capital. So if you haven't heard about them, they're actually relatively large. And as you can see, on Arbitrum, they're one of the top 8 in terms of TVL, and they're the #1 native lending market on Arbitrum. You can see that they have a lot of TVL locked at $74.16 million. Their whole market cap is around 217 million or so. Now, what I really like is this is a company that is a little bit cautious. When you look at what they actually do, it can be kind of confusing with all the jargon, but basically they allow you to deposit crypto and allow other people to borrow it. Now, I think you have to be careful with this, but I think with all these centralized platforms going down, I think there is a big need for decentralized finance. As you can see, they're giving out pretty cautious APYs, 1%, 2%, 3%, and then you can borrow for anywhere between 10 and 17%. So why would people do this? Well, because it's really easy to connect. It's really easy to go in between chains as well, which is really important. People want that cross-chain seamlessness experience. And in crypto, a 13% APY isn't that much when you consider we're going into a bull market here pretty soon. People can afford that. Now, Radiant is a partner of the channel, but that's for a very good reason. Now, what they're doing here soon is they're going to Radiant V2. Now, what they're really trying to get to is a path to profitability. They're going to have collateral support for 20 plus new assets. They're going to have a bounty game V2 launch date here coming soon. Now, what they get at in this article, basically talk about the new era of decentralized finance, is the fact that many crypto projects don't consider profit. They don't even care. They just care about growth or care about pumping their own bags. But what Radiant is trying to do is become the lowest price to fees as possible. Basically like a price to earnings, right? If fees are earnings, because they are for the project, they want to become really, really undervalued, or they want to provide a lot of fees or a lot of income and become very profitable. Now, as they get bigger, obviously, they will be pushed up in terms of price to fees, the ratio, because as you get bigger, you're less risky. Just like you see here, SushiSwap and Uniswap are towards the top at like a 13x, but Radiant Capital is way down here at 1.6x. And this is something that we've talked about with Phantom a lot, Phantom token, but it's a little bit different. I've talked a lot about the amount of usage divided by the price and how much activity there is. And I've also talked about how much runway they have and how they're actually profitable, but that's another ratio to look at, is how much they're being used divided by the price. And I'm guessing a lot of these smaller ones are a lot cheaper because they are a little bit riskier, but as they grow, their multiples will expand just like a company. where if a company is more risky and there's a question of whether it's actually going to go bankrupt or not, it's going to sell cheaper than some company that's really flush with cash and has great cash flows. Now, there are a couple different articles I'll link underneath the video that go through this version 2 and what they're trying to improve. Basically, initial emissions were unsustainable and led to too much inflation. They had insufficient runway because the tokenomics detailed how lenders and borrower emissions would expire after 24 months. They had a low incentive to provide on-chain liquidity to the protocol. Single-sided staking gave users utility in the form of fee capture, even with emission distributed at high rates for RDNT LPs. Exit penalties were not designed optimally, which is just really easy to understand. A user who exits in the final day of vesting shouldn't be penalized in the same way as someone that exits within the first minute of a vest. The fixed unlock periods created uncertainty and unnecessary FUD. Basically, with these group unlock events, there was kind of a cliff, which could cause people to get worried and try to sell ahead of it. And there are other things that they're trying to fix as well. Basically, they're trying to improve a lot of this in, again, their next version. Again, I'll leave links to this underneath the video. I think that it is telling that they are posting some things that they've done wrong. A lot of crypto projects don't talk about what they've done wrong, and they're actually going to try to change a lot of this and improve and become profitable, which is much more mature than a lot of other crypto platforms. Now, something else that's of note is Adam Cochran, who has a huge social following, 180,000 followers, including a lot of people that I follow on Twitter, posted this 268-page thread on crypto talking about some of the top cryptos for 2023. And he put Radiant as an S tier, S class, right up there with Ethereum, one of the few crypto projects up here. He says, Radiant Capital is one of the new projects from the cycle that I'm most excited about. It takes the existing money market model, built it cross-chain natively, and makes it entirely community operated. You can buy on SushiSwap. Having launched first on Arbitrum, Radiant Capital is built on top of Layer 0, a project that only isn't on this list because it has such a successful run-up already, which will allow it to have a natively cross-chain market. Users will be able to deposit collateral on the network and borrow on another seamlessly. Stake your native tokens on Arbitrum and borrow on Polygon to ape into the next farm. Use your OP token as collateral to borrow USDC for mainnet farming. Users will be able to borrow, settle, and pay fees cross-market. The team is entirely bootstrapped with no VC or seed round, and unlike Aave or Compound, which take fees for their developers, Radiant's protocol rewards it all to stakers. That means stakers are getting good APYs right now, 39.75%, but instead of all that coming from a diluted token, it's coming from real use cases and paid out in real valuable assets, the bulk of it coming in the form of USDC. And you can get real yield platform fees paid in Bitcoin, Ethereum, BNB, and stablecoins. You can vote in governance. They're audited by PeckShield, and they have another audit coming with Zokyo, and they are working with ImmuneFi to implement a bug bounty program. Now, I'll leave links to this underneath the video so you can do some more research, but again, the TLDR is basically that this is a smaller project, still large enough though that's getting a lot of adoption and still getting those network effects that are causing it to grow. They are actually improving as well. They're not too afraid to talk about what they've done wrong and try to improve it moving forward. And they do have this big catalyst coming with their V2 very soon. So thank you so much to Radiant for sponsoring this video, and I'll see you in the next one. Bye.